If your trading year felt like one long, messy, losing trade, you're probably tempted to set a New Year's resolution to just be more consistent. But vague goals are a big reason most traders fail. So let's forget that. In this video, I'm giving you a concrete, 3-step trading ritual to start before the new year even hits. We're going to review what went wrong, build a rock-solid pre-market routine, and finally get your trading on the right track for good. Most beginners don't fail because they lack talent. They fail because they have no roadmap. They feel lost, jumping between time frames, hunting for signals, and chasing prices, which only leads to emotionally driven mistakes. This isn't about finding some holy grail strategy. It's about building a system. Every successful trader has a process they follow daily, a method for finding trades, and tight control over their risk and emotions. What I'm about to share is the blueprint to build that system for yourself. I've been in this game for many years, and I've seen countless traders make the exact same mistake every December. They swear to themselves that next year will be different. They promise they'll stop revenge trading, be more disciplined, and finally make it. But here's the thing, a promise is not a plan. The trading day is won or lost before the market even opens. The real work isn't just clicking buy or sell. It's the prep, the review, and the relentless consistency that happens behind the scenes. Money is just the scoreboard. The real game is your routine. That's why we are not setting a resolution. We're building a ritual, a 3-step process designed to turn chaos into clarity and impulse into discipline. All right, step 1, the pre-New Year reflection. This isn't a daily task. Think of this as a one-time, deep cleaning session for your trading mind that you'll do before January 1st to completely reset. You have to treat this like a business, and this is your official year-end audit. First, you're going to get ruthless with your own data. Open your trading journal from the last 3 to 6 months. If you don't have one, it's time to dig through your account history. You're looking for cold, hard facts, not feelings. Calculate your win rate, your average risk to reward on winners versus losers, and identify your most common mistakes. Were you taking oversized positions? Moving your stop loss? Chasing trades out of FOMO? Find the patterns in your wins and your losses to see what needs fixing. And hey, know what actually worked too. Was there a specific setup or time of day that was consistently profitable for you? The data will give you objective truths you can't ignore. Second, physically and digitally declutter your workspace. A cluttered environment leads to a cluttered mind, which leads to rushed, poor decisions. Research shows that physical clutter is genuinely stressful and hurts your ability to focus. So, clean your desk. Organize your chart layouts. Get rid of indicators you never use. Unsubscribe from noisy newsletters and mute those distracting group chats. Your trading space should be a sanctuary of focus, not a hub of chaos. When your environment is clean and predictable, focus becomes almost automatic. Third, set simple, measurable goals for the new year. Forget vague statements like, I want to be profitable. Good goals are specific and process-oriented. For example, a killer goal for 2026 could be, I will risk no more than 1% of my account per trade. Or, I will only take a maximum of 3 trades per week. Or maybe, this quarter, I will master 2 specific chart patterns. These are real goals rooted in actions you can actually control. Focus on your performance as a trader, and the results will eventually follow. Finally, perform a small year-end ritual. Take 5 minutes to visualize yourself executing your plan flawlessly in the upcoming year. Write down an affirmation like, I am a disciplined trader who follows my plan. This isn't some mystical nonsense. It's about setting a clear intention and building the identity of the trader you want to become. This whole reflection process should take you an hour or 2, and it's the foundation for everything else we're about to build. Now for step 2, the most critical part of this whole system, the daily trading routine. This is what you'll be doing every single day. Consistency here is everything. A well-crafted routine is your personal roadmap through the turbulent waters of the financial markets. Let's break it down into 3 parts: pre-market, the active session, and post-market. The goal is a structured, repeatable system you can lean on. Your pre-market ritual is where your edge is built. It should take about 30 minutes. Most losses happen because a trader stumbles into the session unprepared, mentally scattered, and emotionally reactive. Your pre-market ritual is the cure. Start by waking up at a consistent time. Before you even glance at a chart, take a few minutes for mindfulness or meditation to cut down on stress and sharpen your focus. Then, it's market analysis time. Check the economic calendar for major news events like NFP or FOMC announcements. Look at the higher time frame charts, like the daily and 4-hour, to get the overall market direction and mark out key support and resistance levels. This is your map for the day. Finally, write down your trading plan for the session. What instruments are you watching? What specific setups are you hunting for? Having a written plan keeps you anchored and stops you from making impulsive moves when things get emotional. Here's a simple beginner checklist you can steal for your pre-market routine. Economic news checked. Key support and resistance levels marked. Risk per trade calculated at less than or equal to 1%. Mindset is calm and neutral. Next is the active trading session. And listen, this part should be limited to 1 to 3 hours. Day trading does not mean trading all day. Your only job during this window is to execute the setups you identified in your pre-market plan. Stick to your entry and exit rules without hesitating. If your setup doesn't show up, you don't trade. It is always better to miss an opportunity than to force a bad trade. Set price alerts for your key levels so you aren't glued to the screen, and take short 5-minute breaks every 30 minutes to stretch and reset your focus. This is how you prevent mental fatigue and burnout. Finally, you have the post-market ritual. This should take 15 to 30 minutes right after your session ends. Your growth as a trader doesn't happen during the trade, it happens after. This is where you build self-awareness and sharpen your edge. Immediately update your trading journal. Log your entry, exit, the reason for the trade, and, crucially, the emotions you felt. Write down one key lesson you learned from the day, win or lose. Did you follow your plan? Did you respect your stop? This daily review is how you compound your knowledge, day after day. All right, time for the final piece of the puzzle, step 3, the weekly reinforcement ritual. If the daily routine builds your habits, the weekly ritual is what sharpens your skills and keeps you on the right path for the long haul. This should take about an hour, and it's best done on a Sunday when the markets are closed and your head is clear. First, do a higher time frame chart review. Zoom out. Look at the weekly charts to spot the major trends and significant levels that will likely influence the market in the week ahead. This top-down view gives you critical context you can easily miss in the day-to-day noise. While you're at it, backtest one of your strategies. Walk it through the previous week's price action and see how it would have performed. This is a massive confidence builder. Second, run a performance audit. This is different from your daily journal. Here, you're looking at the big picture. Tally your weekly stats, win rate, profit/loss, and average risk to reward. But more importantly, grade yourself on your process, not your profit. What percentage of your trades followed your trading plan? How many days did you stick to your routine? Track your discipline, because that is the #1 leading indicator of future profitability. Third, schedule a skill builder session. Pinpoint one area of weakness from your weekly audit and focus on improving it. Maybe you struggle to identify liquidity zones, or perhaps you need to get better with Fibonacci retracements. Spend 30 minutes watching a tutorial, reading an article, or practicing that one skill on historical charts. Continuous learning is non-negotiable if you want to last in this business. This weekly ritual creates a powerful feedback loop. It connects your daily actions to your long-term goals, making sure you're not just busy, but actually getting better. It's your chance to make small, smart adjustments to your plan and routine, so they evolve with you as you grow. If you followed through this far, that already says something about you as a trader. Go ahead and hit the like button, and make sure you're subscribed to Innerpips Trading Psychology. This channel exists for one reason: to sharpen your mindset, strengthen your discipline, and bring out the best version of you in the markets. If you're serious about mastering your psychology and trading with intention, you're in the right place. So that's the playbook, the 3-step trading ritual to completely overhaul your next year. First, the pre-new year reflection, your one-time audit to review your data, declutter your space, and set clear, process-driven goals. Second, the daily trading routine, your non-negotiable process for pre-market prep, disciplined execution, and post-market review. And third, the weekly reinforcement ritual, your Sunday session to analyze higher time frames, review performance, and sharpen your skills. Success in trading isn't born from a single moment of brilliance. It's forged in the quiet, relentless application of a disciplined process. Stop looking for secret indicators and start building a professional routine. Don't just make a resolution this year. Commit to this ritual for the next 30 days. Track your compliance. Focus on the process. The trader who wins the morning wins the day, and the trader who wins the weeks wins the year. Apply these steps, and you won't just be hoping for a better year. You'll be actively building one.